The stock market is anticipating positive news from the trade issues which have persisted and escalated throughout 2018. The hope is that the conflict will be reduced and confidence will be restored. US stocks have come off their lows in December after 3 months of constant negative sentiment. The question that no analyst will ask is, what about the Fed's QT policy and the role it plays in the overall market? You came here for the truth, so let me unveil that for you. Today we're going to look at the stock market. I want to look at FAANG stocks, want to look at Apple, want to look at Jamie Dimon. I want to look at what's happening with the statistics, any indicators. A lot to cover today, so let's begin by taking a look at the markets. Here you can see what's happening in the markets today on Tuesday's trading session. All the US markets are in the green. The Dow Jones is up 134 points. This is all in anticipation of what's happening with the trade talks. Nothing about QT whatsoever. Nothing about interest rates. Nothing about the Fed's balance sheet. It's all about the trade talks right now. Of course, the Fed is really moving the markets, but we're not allowed to talk about that. The plunge protection team is there to support the markets, but we're not allowed to talk about that. It is simply the trade issues right now. So let's move on to this. Stocks rose sharply on Tuesday as shares of large cap tech companies outperformed while investors remain cautiously optimistic Washington and Beijing could move forward on a trade deal. So basically just what I said. Then they're getting into how we have Facebook, Amazon, and Google all traded higher. Apple stock also climbed 0.5%. They are talking about the FAANG stock index, and it's important to look at these stocks because they were some of the biggest gainers throughout 2018 while most of the stock market was falling or falling flat. This right here shows us that there can be a few stocks ahead of the game. These gains add to the sharp turnaround seen in most of the popular FAANG trades since December 24th through Monday's close. Facebook shares have surged 12% since then. Amazon has rocketed 24.7%. Alphabet are up 35. So we got a huge swing upward right now happening with the FAANG stocks, and because people are seeing what happened previously and they are buying the dip. We'll see how well that works. This is the FAANG stock index, which you can track for yourself. NYSE FAANG Plus index, just giving you an idea of how this has performed over the last month, over the last year, and you could see the 5-year. Obviously, when you see it on a 1-year basis, it doesn't look good at all. In fact, it's down, but over the last 5 years it has performed very well. So people are trying to hope and pray that the performance of the last 5 years somehow persists into the next year or two as they become more and more euphoric about tech shares. This is Apple stock right now, and you're looking at it over the last few months. I think it's important to see where this stock, which was the most valuable company at one point, their market cap was something like $1.1 trillion, and now has come down significantly. It's moved below its 50-day and 200-day moving averages, as shown by the blue and red line, and you're looking at a stock that everybody was saying to buy. When it hit $1 trillion valuation, analysts overwhelmingly said buy this stock. And what happened? It has come down ever since. You're looking at all of these corporations when they get to the absolute peak. That's when we have the most amount of analysts, news media pushing to buy the stock. And then it turns around. And it takes way too long for them to change their mind because they're using models that are so outdated. Nobody understands what quantitative easing is, and they surely don't understand what quantitative tightening is and how important it is really to the actual markets. But of course, that brings me to this. Stocks are rallying even though the news is still bad. Here's what that means. Essentially, they're suggesting that all the bad news is already priced into the shares and therefore it can't get any worse. This couldn't be further from the truth. This article right here is propaganda, and the individual writing the article should be ashamed. Jamie Dimon says the stock market overreacted, no recession ahead. Okay, because Mr. Dimon said it's not gonna happen, you don't have to worry. He's gonna tell you the truth, that's for sure. Any problems are coming, he's gonna be there to explain exactly when it's gonna happen, exactly how it's gonna happen, and make sure that everything is just fine. He's gonna tuck you into bed at night and he'll sing you a lullaby and then shut the lights off just before saying goodnight. This is the type of information that is consistently and purposely ignored in the mainstream media and by all of the analysts. You're seeing the red line, that's global stocks. You're seeing the green, that's global PMI. And then we have the Fed's balance sheet, which essentially we can think of as the quantitative tightening policy going on globally. Is it so coincidental that these have in fact been entirely correlated since the beginning of 2018? You could see where stocks peaked out, where the global PMI peaked out, and the balance sheets of all of the central banks peaked out. Is it so coincidental that ever since then we've had problems? Well, that's what the media is ignoring. That's what analysts, that's what these 7 shares of Amazon type investors are all ignoring. You have to smarten up, you have to wake up, and this is the type of information that should be front page, front and center, right in your face every single time. But of course it's not, because they don't want to scare you, don't want to spook you. They have advertisers, they have investors in their business, and they need to ensure that everything stays calm, and they make sure that they get out first, as we've seen insiders selling at a rapid pace all throughout 2018 during all of the stock buybacks. And then of course you're left holding on to your 7 shares. This is an interesting chart. Just wanted to give you an idea of what's happening with the S&P 500. You're looking at it falling deep below where its peak was at 29.32, I believe was the absolute peak, and it had fallen down to a level of 23.48. So that was significant in the level that it had dropped, and of course it took a few months to get to that point on December 24th, 2018. I had suggested on many occasions that the market was technically oversold at this point in the short term. I do believe it's completely overvalued, but I do stand by the statements that I had made where it was clear and obvious that most days the stock market was down, and as a result we saw the moving averages getting all out of whack, all the technical indicators were getting out of whack, and technically it was oversold. So the market was due for a correction back upward, and this happens to be what we're seeing today. I think it will go far beyond the levels of today if we actually get some positive news out of the trade issues. That would be good for short term, but it doesn't change the overall most important factor, and that is quantitative tightening. I'll say it every single video, I'll say it 10 times a video. It's the most important thing. This is the S&P 500. I just wanted to give you an idea of exactly what has happened here. You know, a lot of individuals are unaware of what happened in 2015, and I really want to do a video about this entirely, but I'll mention it very quickly. In this period of time, we saw the stock market looking very shaky. We had problems in China, we had problems in the US. Obviously, with the sovereign debt crisis was still not resolved by 2015. They tried to paper over that, and it still hasn't been working. We're in 2019 now, and Europe is worse than it was back then. But essentially what occurred was that central banks decided to intervene again, and they pushed up their balance sheet significantly higher. The ECB, the BOJ, and others all decided to expand their balance sheets. That, of course, sloshes around in the financial system and helps stocks rise. So that is very important to note about 2015. The prices of these stocks did not come down so dramatically. It took like a year for it to really become shaky, and then it went higher from that point. But in 2018, things have been very different because the results have been very dramatic. They've been very pessimistic, and we've seen what can happen in such a short amount of time. It hasn't been as bad as 2008 because they've been covering it up much better here in this period of time. But we need a trigger event. We need something big. We need a big bank failure, bigger than what we're seeing in Italy. We need to have a major catastrophe occur, and that will then cause a cascade or a domino effect. Last but not least, just wanted to cover this weekly change in bearish sentiment. At the end of 2018, it was the worst on record, the most bearish. This chart goes back from 1990 up until present. Imagine the most bearish out of all that time, even through the financial crisis. It was worse because everybody was surprised by it. It was looking as if the stock market could never be better. The FAANG stocks were doing so well, even though other stocks were getting hurt, as long as the FAANG stocks kept going, we would have no reason to worry. But of course, you can't do that. The stock market cannot be a handful of stocks. It's not like that. And we concentrate on the Dow, we concentrate on the S&P. We don't even look at the Wilshire. We're not even trying to expand to the entire US stock market. We're not even looking at the global markets, that's for sure. All people want to do is buy up their FAANG stocks and save enough money to get that 8th share of Amazon. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, these 2 books have everything that you need. All you got to do is go to the link in the description, head over to Amazon. It's going to allow you to flip through the pages of the books to see if you like them. If you prefer the audiobook version, you can get that at themoneygps.com.